So in this video, I want to talk about targets in trading. All of these trades that you see on screen have had an approach using targets. Now, when I say targets, I mean session highs and lows, previous daily highs and lows, and data wicks. In today's video, we're going to be talking mainly about session-based liquidity and how you can use it in your trading to get results like these. Now, when we talk about targets, I'm just going to bring you on chart. I want to take you over this example. So we understand liquidity lies at highs and it also lies at lows, and price is magnetized to those areas. Now, when we understand where liquidity lies in the market, it makes it so much easier to get involved. So let me draw you out an example. So up here is the Asia high. This one here is the London high. And all the way down here is the London low. Now, in order for me to get involved in price, I want these to be taken. So let's play price out and simply watch what happens. So New York session is open, it's manipulated higher, but it still hasn't taken the London high. It's come down and taken the London low. Now, as soon as we've taken the London low, watch what happens. Can you see that price is just magnetized towards these areas and it eventually sweeps them? So this is exactly where we'd look to get involved in price. And this would be our target. Now, with my overall understanding of price action, I understand that this is the target. So all I need to do is just catch a small piece of the pie, and that is my job done. So that's just a bit of an overview of the model and how we trade. Now, just to re-emphasize, I will not enter a trade at this point. And do you know why? Because none of my targets have been met. As soon as we get the sweep, you can see how big of a reaction we've had here. So you may be asking yourself, well, how do I actually get in line with these sort of trades? I'm going to leave the times on screen so you can see exactly when I turn up to the markets for London and New York session, as these are the highest probability times to trade. Don't be intimidated by this. It will make sense by the end of this video, so just do your best. So first off, let's mark out our session highs and lows. So you can see here that this is the Asia high, but this has already been taken, so we can just find the nearest high, which is this one. So let's wait for New York to open and see what happens. Wow, that is a sell-off. So instantly upon open, you can see that we've taken both the London low and the Asia low, pretty much within one candle. So at this point here, with these two targets being hit, where would you anticipate price to go next? If I just delete these off screen, the most predominant target now is the London high. So let's play price out and watch what happens. As you can see, we've come straight up to the London high. So can you just see how price is magnetized to these areas? So what we're going to do now is we're going to go onto an on-chart example and find a trade. Okay, so I've come to the chart now, and we're going to just simply our highs and lows. The Asia high has already been swept. So in terms of the actual model that I trade, I actually did create a video last week on this. I'll leave it somewhere above, as I'm going to be using the same confluences in that video, and I'm going to be putting them on this chart today. So I'll come to the chart, I'm going to mark out my discounted price range and just understand where premium and discount lie. So you can see here that this Asia low, I would anticipate to most likely stay intact if we're overall bullish, mainly because this is very low down in this predominant range. So let's just play price and watch what happens. You can see now that we've taken the London low, and as soon as we've taken the London low, we've had an instant reaction, come below the 50% level. So this is a good area to look for longs. Come on to a 15-minute, I can also see that this gap here, we failed to close below, showing me this is a true gap. Now, although gaps aren't the predominant model for this strategy, they are a good confluence to use, especially when looking for areas to get involved in the market. Because this is a true level and we're failing to close below it, plus we're in the 50% range, this is a pretty good sign that this area is likely to hold. Now, just using targets alone, we can now delete the London low as this has already been swept. Now, if I'm not anticipating price to push down to this Asia low, based on this gap being respected, and also the mass amount of momentum in this area, my target's mostly going to be London high. We've also created a divergence in this area. You can see that ES has failed to take the London low down here, and NQ has. That's a good sign of a reversal. And we're also reacting at this deviation -4. Now you may say, but Leo, it's closed below this gap. Yes, it's closed below it on a 1 minute. This gap was actually marked out on a 15-minute, and you can see it's being very well respected. So what I like to use is inverse gaps for an entry. So let's see if we can get a candle closure above here. Again, I'm not going to run through these confluences in this video because we're mainly talking about targets. You can check out the other video that I created last week on this. And you can actually see that we've created this inverse gap here. So let's just see how we react within this area. So as you can see, we've come straight up to our take profit with minimum drawdown. And you can just see how much of a magnet this is for price action. As soon as we got a bit of momentum, we continued that bullish momentum and we've continued all the way to London high. Now this for us is a very textbook trade, and it's just simply using targets. So just as a reminder, I will not take a trade unless one of the targets been hit. So you can see this was the London low. As soon as this was taken, we had some pretty decent reactions and we just flushed straight up to the London high. And this is just simply understanding where liquidity lies. So when one liquidity point gets taken, it's likely to seek the other. And using the confluences that I've used in today's video just adds that extra confidence to the trade. And as I mentioned at the start of this video, every single trade that you see here has been used simply with targets. Now the trade that I ran you through today, I actually did take. These are the confluences for it. So it was taken on a Thursday, gave me a pretty nice return. And as you can see, it was just so clean. So hopefully now you're able to go away and have a little look at this on your own chart. If you do have any questions, please feel free to leave them down in the comment section. I get back to all the comments, so please don't hesitate to leave as many as you like. I'm going to leave my social media pages down in the description below if you want to keep on track on what I get up to on a day-to-day basis, and also keep track of all the trades that I take. And if you also want to trade alongside myself and my mentor, as well as the rest of the trading team, I'll leave a link down below where you can book a one-to-one call and see if you'd be a good fit. We're only keen to get committed traders involved, so if you feel like you're that trader, feel free to book that call. It's completely free to do so. But with all that being said, that's today's video. So I hope you've enjoyed, and I'll see you in the next one.